Hi guys, this is Investing with JYK, and today we'll talk about Micron in the context of a cyclical company. So I collected, well not collected, I downloaded the 20-year Micron data, the fundamental data, which contains all the ROEs, ROAs, and all that stuff. And in case you don't know what Micron does, Micron makes NANDs, which is one type of flash storage, and they also make DRAMs, which is what we usually call memory in computer. So what may jump out at you is this. Right, so these three are return on asset, return on equity, and return on invested capital. And you can see they follow a very distinctive cycle, really. And the same thing carries on, obviously, to net income. So that's what it does. And here is the price to book and price to sale. Now, you may see this part is really, especially here, the PB here is super high, like 6. And the main reason is a dot-com bubble. So if we started off somewhere more reasonable, somewhere like 2002 onwards, you can see that PB kind of follows the both the ROA and ROE a little bit. You can see those trends following each other. Right? As net income goes up, PB goes up. As ROA goes up, PB also goes up, and so on and so forth. And what you notice is on the recent upcycle, the PB kind of is lagging a bit compared to both ROA and net income. And you can see their ROE is just ridiculous at the moment. They're at 0.45. They're at 0.5 ROE. That means give them 2 years, they would be able to double their net asset. That is quite crazy. So yeah, so that's what you get. And then the other important thing is before we go into the capex, just look at these 3 graphs, and then you would think, okay, so their income is super unstable, and it seemed to follow some kind of cycle, and their capital efficiency, which is measured by ROIC, is also varying a lot over time. So let's look at their price. I think I had it here. Yes. And if you so I excluded the 2002 data, so we start from 2003 because then actually we can start from 2002. No, that's the wrong 2. Okay, so I think here is still a little bit of carryover from the dot-com bubble was still coming down. And let's switch backwards and forwards. You can see in 2003, that's when the thing is kind of bottoming out, and then you get the uptick here. So let's see, 2003, and you get a slight uptick all the way to like 2004, almost like early 2004 when it peaked. Right, so 2004 is at somewhere here. So that's when they actually just begun to make money. And the top earning actually came in, I think that dot, oh, come on. Yeah, okay, so it's 2005, March 2005. So at March 2005 is already no longer high. So the market is discounting it, so it's no longer high. And then if you look at the next bottom, obviously that's the global financial crisis, so we can't really blame them. But you can see that the high earning, somewhat relatively high earning, even though it's still just 5% ROA, ROE, right? So it's still pretty pathetic. And that goes all the way down to, what is this dot here? Nah. Come on. So 2009, June 30th, 2009. So it's somewhere here. That's already past the bottom. So the bottom of the price appeared before the bottom of earning by about almost like half a year-ish. Right? And then that cycle continued until top earning again at 2010. Oh, my mouse ran out of battery. Oops. So that is September 2010. Let's see, September 2010. So half a year later, earlier, basically, that's when the peak was in. And the next cycle again is at 2014. In well, the bottom appeared here at, what is this? 2013 March. So 2013 March was the bottom of earning, but the bottom of price is actually about, again, there's an it was slightly earlier than that, somewhere at around here at, here it says October 23rd. So that's when the bottom of price happened, the bottom of earning happened somewhere here, and then the thing kept on going until the peak, the absolute peak earning, actually, the peak earning was at this is what, 2015 March. So 2015 March is here, and the peak of price actually happened all the way up here, I think. It's either this one or this one, but again, you can see it actually happened before that. Right, so that's peak earning. And then the previous peak, you can see this thing is amazing. The correlation is so high. You can see the two peaks, and then there's actually two peaks and two peaks. And then the bottom came in at somewhere around September 2016. So that was here, but the actual bottom appeared earlier that year in January. Or maybe it's May, but it's like 6 months earlier of bottom price, and 6 months later you get bottom earning, and at that point, you get this huge cycle up, and you can see I don't know if this is the top, the actual top, but looking at this graph, you're like, okay, almost every 2 years or something they get a shit show. What are the chances this thing's gonna keep going up? Plus, if you're getting 50% ROE, what are the chances that all the other players are not gonna come in to your area and to your industry and not try to take profit away from you? Because if you think about capital, it's like water, and then when there's inefficiency, you can imagine like the field is not flat, right? If it's flat, everybody should get the same return on capital. And if the thing actually there's a low point, is basically when the return, if you invert the ROIC, you can think of that as like the low point, and the capital would automatically flow there, and by flowing into that place, you drive down the return for everybody in that area, and then eventually it should become flat. Right? So that is how I think about these. So looking at 50% ROE and 30% ROIC, and then you think like, what are the chances that people are not going to come to for your profits? Right. The other thing that you may want to look at is, in 2000 and on the previous bottom, it was negative. So basically, if you started buying when the guys were losing money, right? So if you bought somewhere here, 2000 and what is this? 11 December 2011. That's actually a fairly good place to get in. And then if you don't necessarily need to know when their bottom earnings going to come in. And in this case, 2007 is a different thing. That's crisis. And in here, if you just bought when they crossed, that was what's this? Somewhere September, right? You bought in September, somewhere here. It's not at the bottom, obviously, but you get yourself a really good gain. So that's why, if you refer to my previous video about cyclical industries, like really these companies, you have to buy them when they're losing money. Obviously, you don't want to buy like a shitty company that's losing money. You want to buy an established player that's losing money. And the other thing that corresponds to is basically PB. When PB is really low, when PB is in this case is like less than 1, you might want to look into them. Obviously for PB you have to be careful. See how the B comes about, right? How much of that is intangibles, and how much is that the money they actually spent. And then you also have to think about like, is their depreciation schedule reasonable and all that stuff. So it's slightly more involved, but it is still a much better gauge compared to PB. But better gauge compared to PE. And the other thing you may be interested is PS, right? So when PS is low, that is actually PS is not terribly good. But okay, so this is Micron. So let's just do a quick comparison against Intel. So I also collected Intel's data. You can see Intel. You can say, oh, the ROIC actually jumps up and down, but this actually follows a different path to Micron, and you can see this thing. Bottomed at here, which is this is a global financial crisis, so whatever. And Intel's turned down in terms of ROA and ROE, and their the amplitude of their cycles are much more subdued compared to the Micron one. So let's just compare against the Micron one again. You can see, and especially if you look at net income, right? So Intel's net income is here. They never go to negative. So here's a 0. They never go to negative. Yeah, it goes up and down and whatnot, but they can actually sustain like a couple of years within one $10 billion range. Right? But if you look at Micron, it frequently goes to negative. So these are all negative places. So overall, so that actually brings a very interesting point. So cyclical industries over the long term usually gives you worse return than non-cyclical industries. And as investors, if you want to buy cyclical industries, you have to be very sure that you know when the cycle is. You want to play the up cycle. Maybe you want to short the down cycle, but long-term buy and hold on cyclical industries doesn't usually work very well. I've checked a couple of them, right? There's in different industries. I checked Ford. So Ford cumulative return is much worse than, say, Coca-Cola from the same period. I've checked GM. GM went to 0 in 2009, and then came back again. If you look at Toyota, probably is gonna do better than Ford, but they probably can't compete against. I haven't checked those though. I think they will do worse than, say, even an insurance company. And then in terms of memory, Hynix is gonna the Korean pure semiconductor company, not like Samsung. Samsung has phones and whatever. Hynix just builds these things, and so that's the thing. Like, these companies are not good for long-term buy and hold strategies, and some of them will go bankrupt. Obviously, GM and Ford, these are their cycle just coincides with the business cycle, and in terms of oil, or even in this case semiconductor, their down cycle typically corresponds with the down cycle of economic cycle, but they're upside between the economic cycles. They can have multiple small cycles. And the other funny thing is, if you look at Micron's thing, right? If you think about the time between those things, think about when they start spending money. Here's their capex. They spend money in 2007, a lot. Well, obviously that's peak of the cycle, so of the economic cycle. But even say, 2000, they spend a bunch of money, right? Let's ignore their stock price. Just think about their net income. Spend a bunch of money, and 2 years later, they're well, what are they doing now? 2 years later, they're negative in earnings. They spent almost 3 years down here, so getting crushed because they're negative in income, until the thing turns. So basically, they can't spend much money down here, and then you get subdued capex, and then you get the uptick. And 2 years later, after this peak, obviously you're down here, which 2010 they spent no money. So if you bought in 2010, I think they're just paying back though at that time. So so in this case, it's not just them. There's other players in this industry. I actually found a graph that shows us. Actually, yeah, that might be more interesting. Let's look at the graph. Here? No, here. Yes. Okay, so this one actually spans all the way back to 84, right? So you can see, like, after 2 years of, typically 2 years of low spending, they get a couple years of huge spending, and then after that, the spending drops off. So let's find until somewhere we have data. We have data until 1998. 2 years of no capex or decreasing capex, and that corresponded to 1998 is they basically spend nothing, right? So 2 years later is 2000, and they get this increasing profitability, and at the peak of that cycle was at 2000, 85% increase. You're gonna get effed. So that's 2001, 2002. 2002 is the 2002. These are the bottoms, and then again you got a lot of capex. 2004. 2004 should then let's see. 2004 is a big capex year, but then there's little increase again. So that one actually lasted a bit longer until the drop in 2008 and 9. So this is when all the money is very tight. So, but then given that, you would think, oh, 2010, 11 will be doing really good because nobody has additional capacity. So you can see 2010, 11 was really good. Right? So this thing is, all you need to read, all you need to think about is, how long does it take for capital to turn into supply, right? So how long does it take to build a new factory? And when they're spending the money, and then you can think, they're spending the money now. Maybe 2 years later, there will be a bunch of new capacity coming on, and that will be the down cycle. And then you look at The same thing goes on in 2012 and 13. That just by looking at this, I might predict 2015. Right? Around 2015 is when you have a good year, 14, 15. Low, down, down, and then you get a good 2014 and a somewhat good 2015. So 14, 15. Right? And then you look at, then you got to decrease again, 2015. That means 2017 should be really good 2 years down the road. So 2017 is when their profitability explodes again. So that's really an interesting correlation. This correlation is so strong. You just need to shift capex like 2 years forward and flip it. That's basically your profitability. Okay, so that's one interesting thing, and the other thing is like so let's say we want to figure out what Micron is doing. So this one only has 2017 forecast, right? So this one is in the middle of 2017, so actually they don't actually have the data. So let's figure out what is going on around the world. What does this number actually look? I couldn't find the actual 2017 numbers. I mean, you could try to find it by adding up, say, Intel, TMSC, and Micron, Samsung, and Hynix. I'm too lazy to do that, so I just try to find it in other ways. So how is Micron's stock price going to do? Just by looking at the graph of Micron's profitability, you might think it's either going to do one of those double tops again, and so you get like 2018, 19 doing pretty okay, and then you drop off then, or maybe that's the drop off. But it's hard to imagine their profitability will keep increasing. And but let's go figure out where other capex is coming from. Right, so Samsung look at Samsung's capex. Holy crap, look at that. That's their semiconductor capex. Okay, so this doesn't look too well. If it's only Samsung, maybe the industry can absorb that overcapacity. But what about Hynix? Hynix is spending 10 billion. I couldn't find an historical graph of this. 10 billion isn't little. It's the same as Samsung in 2016, and they're going to spend 10 billion in 2017 and 18. By the way, this is my response to a video on Micron. So this this channel, Financial Education, he basically talks about different stocks, and he doesn't own Micron, but he's somewhat bullish on it. He thinks that the big banks, have something against Micron. But anyways, so I'm looking at this, then I think about, okay, so who are the other people? Micron is going to spend 8 billion in 2018 in capex, and then you got the Chinese. So the difficult thing about Chinese is that most of the material is going to be in Chinese. So the good thing is I do read Chinese. So haha. So this one is the national. There is an actual national IC industry development advancement strategy or something like that. So they actually talk about trying to increase the, where is that stuff? Where is that stuff? Damn, I was just there. That was like a 60, 45. No, couldn't find it anymore for some. Oh, here. It says they accelerate the development of of IC manufacturing, and it says, okay, add more capacity to 40 nanometer chips, and accelerate the production of the production line construction of 32 and 28 nanometer chips, and and push for 22 and 16 nanometer production line chips. All right, so they want that, so that's all nice and dandy, but how much money have they spent on it? So what I found was the Chinese government started a investment fund that has in total since 2014 to 2016 has spent 56 billion yuan. So divided by 6-ish, you get about a 9-ish. So $9 billion. So that's not too much, but it says it has brought the private sector investment into 150 billion yuan. So 150 divided by 6.3 or something. So $20 billion. So they spent total something like about $30 billion in 2 years. So that's basically means they actually spend quite a bit of money as they promised. But then the next thing is how much more they're gonna spend. So I found there are quite a few that do just NAND and DRAM. So you got the Uni group that is going to says something around here. Okay, here we go. It says it's gonna build a NAND, flash, and DRAM, and it's gonna the first part, part 1 is 10 billion. So this is actually 100 million. We Chinese count in 4 zeros, not 3 zeros. Gets me super confused every time I think about numbers and speak in English. God. So it's gonna spend 10 billion for 100,000 wafers. I think that those are wafers, or it says chips, but I think it really means wafers. It's kind of odd. And then later they're gonna spend 30 billion more dollars. Right, so that's one. And the second one is this part that's happening in Wuhan, which is in central China. So okay, so in 2017, well, that's end of 2016 really. They started building the $24 billion national storage base. I don't know how to translate this. And it says the first part, part 1, stage 1, or phase 1 actually. Phase 1 is going to be $8 billion, and it's going to be done by 2018. And it's going to be 300K wafers per. Yeah, this one actually says pieces, so assuming it's going to be pieces of wafers per month. So that's actually a lot of production. So they are gonna, I don't know how much more they're gonna spend. So at least 8 billion is already. It says the money is already there. So in the future, maybe they're gonna spend 16 more billion dollars. And you got this part. You got another DRAM factory. So they're gonna spend. Well, they're gonna spend $7.2 billion. And 12-inch DRAM, 12-inch wafers are actually the high-end ones. And yeah, so that's more money being spent Oh, by the way, you can look at this. Where people are spending money, you got Samsung spending on Xi'an, but that's Samsung stuff. In Wuhan, you got the one that we just talked about. And in here is in Hefei, and that's this one here that we're just on this page, right? And you got whatever crap that's they're building in here, building DRAM. I haven't found any data on this, and I don't actually know which company this is. So they're building some flash, and I don't know what this is. Some Taiwanese way of speaking, really. DRAM plus maybe NOR, I'm guessing. And Hynix is building, is spending money in China to build DRAM, and Unigroup and Intel is spending money to build NAND. So a lot of money being spent in China, and driven by the Chinese government alone, there's a lot of money too. And you know, I made just a tally, so it's gonna come up with something like close to $100 billion in capex in 2 years, basically. And I basically take a 50% discount on all the Chinese investments if you think the Chinese investments are inefficient and they don't have the technical like the people that's needed to build all that stuff. So even with that, you're looking at $100 billion, and that is 1.5 new microns. So imagine you added 1.5 new microns to the world. And micron, I think, was something like 15% or something. Micron market share. Well, how much is that comparison? Ah, nice. That is very useless. Statistica. Okay, so actually they're not too bad. They're about 6, but that's total semiconductor. I was thinking about storage. Storage. Oh well, I can't find it, but maybe I can find that number and just update it on the show on the note section. So yeah, to summarize, if you want to look at a cyclical industry and you want to invest, make sure you know which part of the cycle you're in. And if you want to do the long side, buy when major players are losing money. And the way to predict to a certain degree where when the supply will be there is to look at capex, especially industry aggregate capex. And next time, maybe I'll find an example of demand side analysis, right? Because this cyclical stuff is you have to look at supply, look at demand, if you predict how each one would behave. So if you like this, please subscribe and click like, and if you don't, well, at least click dislike, so I know I'm doing something wrong. Thanks.